What is going on, guys? Welcome to Stock Talk with Nico Criticos. Today, we're going to be talking about Estee Lauder stock because, as you can see here, the stock is down over 20% today. And not only that, but in the last 4 years, the stock has fallen over 80% because about 4 years ago, this stock was $370 and this stock is only $68 now. So the reason the stock fell today is because they are cutting their dividend, which I think is actually a great sign. That to me, that should make the stock go up. And then they're getting a new CEO, and we have the fact that sales are not recovering as quickly as they thought they would. Specifically in China is where one of their big markets is, and the sales have not picked up like how they were expecting. So that's part of the problem. Now, as for the dividend, if we take a look at how much this company has paid out in dividends the last 12 months, it's almost $1 billion, okay? And for a company that is doing what, $400 million of net income on the bottom line for the last 12 months, almost, 900 plus $1 million is a huge amount. That could triple their net income, right? So that's where I'm looking at this. Like, the fact that they're cutting the dividend is a good thing. Then the fact that they're getting a new CEO, I don't see that as a bad thing either, right? A lot of times investors are scared when the company gets a new CEO, which is understandable. But in this case, I don't really think it's a horrible thing, especially considering it's not like this stock has been doing, if this stock was just killing it and the net income was up huge and they had just been killing it year after year, that would be different. But this company has underperformed for the last 3 years in a row now, right? Their sales have been dropping like crazy. So why not have a new CEO in here? Then we get to the fact that the sales are slowing in China. That's one of those things where that's hard to predict, right? That could take 6 months, it could take a year, it could take 2 years, it could take even 3 years, right? We don't know what that's going to look like. But they do say they are working on a turnaround program designed to cut costs and overhead while reinvesting in its brand and innovation. Now, a lot of companies will say that when their stock is down, and I would say more than half the time it does lead to a huge turnaround in the company, and we do see profits go up. We see companies like Starbucks implementing that right now, right? In the last couple of years, we saw Disney implement something like that. So most of it doesn't always work, but most of the time when these companies say that, it does amount to some progress. So that's the good thing. Now, am I interested in buying the stock? What do I think about the valuation? Well, the question you always have to ask yourself is, what is the reasonable number for net income we could see this company doing? So let's go to, I like looking at it on a yearly basis, right? On a yearly basis, this company has proven to put up numbers like $1.2 billion on a pretty consistent basis, right? So that's pretty realistic. Now, will they be able to jump to that number in 2025? I don't know about that. That would be if everything goes according to plan, then maybe. If everything works out perfectly in their favor, maybe we see them get over $1 billion in net income. I think it's more reasonable to think they can do a number like that in maybe 2 years from now, maybe even 3 years from now. But I don't, for where the stock is priced right now, it almost looks like it's going pretty much to zero, or it's going to a company that is just a money losing company. So I don't know if that's realistic. I mean, the company did over $15 billion of revenue. This is a giant company out there, and they're in a great space, right? The beauty retail space is a great space to be in. So that's where I kind of think like this very well could be the bottom. Now, the other thing is, let's say things do not go according to plan. Let's say they're still failing with sales and profit margins for the next 6 months. Well, then this stock could go down further. Maybe not a lot further, but it could go down to $60 or $55. That's very possible if this company does not perform how they need to perform. So that is a possibility. That's why if you're going to make a position in this, I would not make it too big, right? I would buy maybe 30 to 50% of the position you actually want. Just buy those shares today and then wait, because there's a good chance this stock can come down. Or more realistically, I think there's a great chance that the stock will just stay at around this price for several months. And then in 3 months or 4 months from now, when we get some good news that things are looking better at the company, or we see better recovery in China, or the CEO releases a new plan that gets investors excited, once we have some piece of news like that, or some positive sentiment around the stock, then we will see the stock maybe have a day where it shoots up 10% and it runs up 20%, 30%, whatever. That's very realistic too. That's why I don't think this is a bad investment necessarily. I mean, we're talking about, how I said, $15 billion of revenue. Typically, they do $1 billion net income, but right now we're looking at more like 400 million, right? But remember though, you got to factor in they're cutting that dividend. That could add several $100 million to that number, which means they could get to $1 billion in net income fairly quickly, right? Maybe within a year they can do that. So with that being said, let's say this company does over, let's say they do $1 billion net income. Right now it's trading at a $25 billion market cap. That would put it at 25 times earnings for next year. That's pretty cheap. That's pretty conservative, especially if you compare it to where it's traded at in the past. So right now they're saying it trades at 63 times earnings, which is pretty accurate because how I said their numbers is only 300 or 400 million. But this company's PE ratio trades all over the place. As you can see, it's been up to 160 and it's been down to 25. But the good thing is, again, 25 has been the minimum, right? So paying $25 billion for this company is pretty conservative. That's a pretty good risk to reward your chance you're taking there, right? So maybe the company trades down if more bad news comes out, maybe this thing goes down to a $20 billion company or maybe even 18 or something like that. But I would say that would be short-lived and that wouldn't last long. And we're going to see this company go back to a $30 billion and $35 billion market cap over the next 6 months to 12 months. I think that's realistic. I think it's likely, actually. So I don't know. I would like to keep an eye on this, and maybe if let's see what it does the next week or two. Then maybe I'd be interested in buying a small position. But again, it's got the risk to it because they're in a bad position. They do have to execute. They do have to make some good decisions here if they really want to turn this company around and have, permanent success for the next couple of years, not just something that lasts a month or two or makes the stock jump up one day. I mean, if we want to see the stock maintain at, above $100 a share, we need to see real action and execution coming from this management team and this new CEO. So that's my thoughts on it. I wouldn't say it's necessarily a bad investment. They're in a bad spot. You're taking a little bit of a risk. But when you look at the numbers, you're only paying $25 billion for a company that can very easily, within a couple of years, be doing several billion dollars of net income. They did almost $3 billion a couple of years ago. So if that happens, well, then yeah, this stock could probably double, right? So it's really not that bad of an investment. I think there's a lot more upside than there is downside. It's just a matter of how long does that take them, right? How long does that take them? And over the next couple months, what does their actions and execution look like? That's what I would be on the lookout for. And that is going to be my stock analysis for Estee Lauder. Thank you very much for watching, and I will see you guys.